Hey, this is Kehinde Fawumi. You're listening to the Unleash Your Genius podcast. I want you to write down what your financial goal is for the next 5 years. So, how much do you want your net worth to be? And I mean net worth. So, if you deduct all the income you have and remove all your liabilities and all your expenses, your net worth, I want you to write it down. Please do it now. Write it down because it's important that you define a number. What is that number? How I want you to think of it is that, let's say you've written down $1 million. Let's assume that's what you wrote down. That means that by December 2024, counting backwards, you need to have at least $700,000. And by the year 2023, let's say $500,000. And by the year 2022, let's say 250,000 US dollars. And I'm just giving you an example. So I want you to think about the end of this year. So 2020, December 2020, in the next, 5 months or so, what do you want your net worth to be by the end of this year? And what can guide you is to think about in 5 years. Don't think about where you are now. Don't care about that. Only care about your goal. Think backward from your goal. Don't think forward from where you are. Do you understand that? Because you will get completely different results if you think from where you are now. But think about that goal in 2025. Think about it and then count it backwards. So write down a number, how much your net worth would be by the end of this year, and think about it from the 2025 goal. What I want you to do now is multiply those numbers by 10. All right, because I assumed you were thinking small. I just assume it. So please multiply those numbers by 10, and that's the figure we're going to work with. So if you've written 1 million for 2025, then your goal will be 10 million, not 1 million. And if you've written, for example, 100,000 for the end of this year, your goal will be 1 million. Please do that now. And I don't care how big you thought you've thought. I want you to multiply it with 10, and I want us to go from there. Clarity is power. So it's important you calculate how much you need to reach financial independence. When your brain knows a number, and I tell you, practically this has worked for me. When your brain knows a number, your subconscious mind will find all possible ways to help you get there. It happens magically. If you ever have written down a goal and you never achieved it, then something must be wrong somewhere. I want us to now use another rule that's quite known to calculate what you need to reach financial independence. Think about your monthly expenses right now. How much do you need to take care of your rent, your feeding, your family, everything that represents expenses, maintenance of all, things that you have? What's the total? Give it a number. Multiply it by 12 and then multiply by 20. All right. Now compare that number. And if this number is bigger than your goal, the financial goal that you set. So if you set 500,000, for example, earlier on when we did the calculation, and then you now calculated 720, then you need to use this 720 and not 500,000. So you need a plan. The heights that great men reach and kept were not attained by certain flights, but while others were sleeping, they were turning upwards in the night. I like that quote because it means that you need to get to action. And this is the goal. You first of all want to achieve positive cash flow, which means that the total of your income must be greater, at best even far greater than your expenses. But you see, the big goal is passive income. You want to get to a point where you're not just increasing your income, but you're increasing your passive income. Assets is anything that puts money in your pocket. Liabilities is anything that takes money from your pocket. And what I want to say clearly here is that it really doesn't matter what possession you have. What you do with it is what determines whether it's an asset or liability. For example, you have a car that takes money from you because you buy fuel, you fix it and all that. That makes it a liability. But if his car is used as a taxi, then it brings money in for you. It becomes an asset because you get money coming in from the usage of that car. So it's not really the thing in itself. A house can be an asset. It can also be a liability. So what you want to think about is how can I transform whatever I have to an asset or a liability?